back a little bit to Powell and kind of, his, I guess, role in all of this, because it seems like you said, the market almost seems to be trying to direct him, or seems to be like kind of screaming for a pivot essentially. And in the last Fed meeting, he basically, they raised by 25 basis points, a little bit less than the 75 that they've been doing, the past couple meetings. But in that meeting, he also said that he doesn't plan on, pulling back or pivoting for the rest of the year. But, it seems like kind of general market sentiment is that he's going to kind of go back on that. And you mentioned it a little bit already, where he's been having to backtrack a lot, where they say something and he kind of has to, seems like he's kind of sticking his foot in his mouth in a meeting a few months down the road. So you kind of foresee, I guess, maybe a situation like that with the interest rates policy throughout the rest of the year, where maybe there will be a pivot towards the end? Or do you think that they're going to hold true, just kind of based on a lot of the factors that you were talking about earlier?
Well, I think that they could just stay. They could get to the terminal rate and then see what happens. And that is, we're looking around 5% on the Fed funds rate. Yeah, we could get there. And then their plan was to just stop and see how what happens with inflation, and that gives them the potential to be able to, if they have to raise, the Fed funds rate higher to control inflation, then they'll do it. There's the problem I see is, what if they aren't controlling inflation? The stock market is going up, and it's not going to be a beneficial thing for their fight against inflation. We've already seen a lot of job cuts within technology companies. Those are high profile, but we're not seeing it in the jobs data. The jobs data is absolutely as good as it gets. And if someone said the Fed would be raising rates as much as they have, and the unemployment rate would be at 3.4%, I think nobody would have believed that. I still can't believe it. It's super low, but that will start to tick up, and I think that that's the market has had this bad news is good news type situation, but we could start to see, we might still see good news on the economy, and that could put a crimp in their hopes for rate cuts. I just don't see rate cuts this year at all. I think it makes no sense. The only way you'd get rate cuts is if there's some sort of dislocation in the market and the S&P is trading under 3,500, maybe 3,000. From the valuation levels, 3,000 actually makes more sense. And so again, I just, the market going up and people thinking, oh, we'll be buying the market because the Fed's going to cut. I think that's just ill-advised. Don't see that happen. I can't see the Fed cutting rates with the S&P at all-time highs. Just makes no sense to me at all.
Yeah, and I agree with you there too. I don't really foresee them doing that this year as well. But obviously, you have a lot more experience in the market than me. But I also kind of thought that they weren't going to slow down quite as much as they were. Just kind of like based on what Powell was saying, going from 75 to 25. I thought maybe this one, obviously, as it got closer to the event, it seemed almost like a guarantee that they were going to raise by 25 basis points. But I thought, in that in between time, I thought, maybe that they would raise by 50 or so. But you brought up the unemployment data and everything that kind of comes along with that. It seems like unemployment or layoffs are making a lot of headlines, especially when it comes to the tech sector. But there's been like kind of a lot of, maybe debate back and forth, or at least that from what I've seen, as to, maybe not necessarily the validity of the data or anything like that, but a lot of these jobs and these layoffs from the tech sector, it seems like a lot of them have been able to get, reemployed within 2 to 3 months, or at least that's kind of seems like average. Like anecdotal stories I'm hearing all over Twitter, or people are getting laid off and then going to another job where they're getting a a big pay and other things like that. So do you still kind of see, I guess, this unemployment data being kind of a lagging indicator, and that it's going to go up kind of throughout the year as planned? And I guess, yeah. Now the floor is yours. I'll let you have that one.
Well, I just want to go back one thing. It's possible the Fed downshifted to 25 basis points so they can keep doing 25 basis point hikes. And I think for March, it's a given that they're going to do that. The next meeting is 6 weeks later. I think it's early May or maybe late April. I'm sorry. It's a Sunday. I haven't had enough coffee. But I think that if anything, they may have downshifted so they can continue to do 25 basis point hikes longer to continue to put off the inevitable rate cuts. So that may be their basis of why they're downshifting. As far as the unemployment rate, so one thing that I always tell people, watch the jobless claims data around the 12th of every month. And so that's next week's numbers, because they do the survey for the non-farm payroll and the unemployment rate. Those are totally separate reports done by two different organizations. So that's when they do the survey. We've seen such low jobless claims that every time I see one, it comes out and it's under 200,000, it's just like I blush because it's so good. But I think that is, I think you're going to see unemployment continue to go up. I think you're going to see, and I can actually see 5% unemployment, which is a very low number. But the problem that typically happens is once unemployment starts to go up, it continues to go up for quarters, not just 3 months. It's going to go up probably for a year. And the other thing that in the data that was really surprising is the wages continue to stay very sticky. So wages are really, really strong. And that, I think, is something the Fed's watching, and they can't do a whole lot. One other thing with the Fed that I kind of thought about is maybe maybe Powell was being so dovish because he thinks that transitory inflation is actually still in play. Maybe he thinks that, okay, it's coming down, the S&P is staying bid, jobs are good, wages are steady, but unemployment's or the CPI's drifting down. You've got energy prices lower. You've got, maybe we'll see rents come down. There's a big adjustment that they're going to do for rents that will basically lower CPI and undercut the amount of the shelter and rents that was used in the CPI calculation. So that's, whenever they change the rules, it's kind of like, so maybe that's his plan. Maybe he is fine with the market going up. Maybe he thinks that, okay, we'll be okay with a 4% CPI and inflation rate. Maybe just we'll do it longer, and year over year it'll start to look better. And maybe that's his plan. I don't know, but I just think that if anything, it is hurting the economy. It will hurt the economy. It will hurt consumers. And if you look at the M2 numbers, as far as savings rate numbers, there's still cash in a lot of people's bank accounts, but unfortunately, that's starting to dwindle down because you're seeing credit card usage increase for staples and energy bills and things like that typically is not a good sign.